more on the broader markets. We are joined on set now by Jason Trennert, chairman of Strategas, a Baird company. Jason, great to have you with us.
Thanks for having me.
What do you make of what's going on with, I mean, it's a key week for President Biden in terms of whether or not he stays in the race. There's a key meeting amongst Democrats today. The NATO summit is all week, and he's going to be on Showcase with the opening remarks and then also a press conference on Thursday. Does this matter for the markets, or is this just political theater?
I think it's a little bit more political theater. At this point, I think that if you look at the betting markets, it seems clear that investors, or at least people who are betting, seem to be pretty confident that Donald Trump will likely be the next president. I think it's personally, I think it's way too early. 4 months is an eternity in politics, but certainly with what's happened since the debate, I think clearly popular opinion has certainly moved that way. So market's a discounting mechanism, so I think it's largely in there, but I think people also understand that there's a long way to go. It seems unlikely, in my opinion, that President Biden will be the nominee in November. So I'm not sure anyone's really planting their feet, and they're waiting to see how this works out, which I think is wise.
Betting markets, if you're going to cite the betting markets for Trump, you might as well set him for Biden because he's at 65% to be the nominee now.
Yeah.
Versus 20, so why do you think he's not going to be the nominee?
I think I just see what I see with my own eyes, and I'm not sure he's going to make it. And I think when push comes to shove,
it can't continue, it doesn't. That's,
yeah, you know,
that's
I think
Carvel's
it's not,
famous.
Yeah, exactly, Herb Stein. Yeah. So,
but you can't. If he doesn't decide to go, you can't tell him he has to. I don't care. Unless you're, I think he said God could tell him that. But.
God, the Lord Almighty could tell him that, which, you know, he could tell us everything. It all tells us something, right? But it doesn't seem likely that he's going to tell President Biden to get out anytime soon. But listen, I think there are just realities of running for president. That kind of physical and mental and emotional strain would be tough on anyone of any age. It's certainly tough on someone that is older and, let's say, not in the greatest of shape. I don't want to offend anyone, but I think we can all see what's happening.
Right. It's that's the backdrop to what will be an interesting few months in the markets, especially with the S&P now sitting at a record high. Today, we're entering earnings season. We've got Jerome Powell on the Hill this week. We've got a lot of, stuff happening. How do you think we're setting up? I mean, are we in for the correction of 10% that Mike Wilson's got? It feels like there are a lot of nervous bulls. Like you have to acknowledge what the market is doing, the momentum it has, and yet you don't really want to jump on the train, to stay on the train. There's part of you that just looks at valuation and says, we're at peak valuation right now. Yeah,
Melissa, you're so right, and it's something we struggle with every day. Evaluation is a terrible timing tool for people with short to intermediate time horizons. You know, if you're Charlie Munger or Warren Buffett, valuation could be a wonderful timing tool, or you're not so worried about the timing. But if you're a professional investor, it's hard not to be involved in this relatively small group of stocks that are powering the market. I would be I'm largely coming down to, it's obviously earnings in the next couple of weeks. It seems unlikely, I think we would have gotten more indications, let's say if the AI trade was going to be weakening, I have a feeling we would have more clues of that. And then also the 10-year Treasury yield I'm paying a lot of attention to. We found that once 10-year Treasury yields hit 450, that's when the market really has time digesting the current valuations. But anything lower than 450, we're at 430 this morning, it seems unlikely that there's going to be much to upset the apple cart. Also, going back to the election, there is an enormous amount of liquidity that's being pumped into the market, but certainly from a fiscal point of view, there are new tools like the employee retention tax credit, student loan forgiveness, Freddie Mac securitizing second home loans. All of those things are being brought to bear to keep the economy out of recession. And so in some ways, you're fighting the federal government, you're fighting the political cycle. You're also, I think it's likely that the Fed is going to ease. I still think September is a live meeting. So there's a lot to fight here, even though I would completely acknowledge the fact that I'm a little nervous because so much of the chips seem to be in a relatively small group of stocks.